Good morning, everybody. Wow, we're up 0.5% already. Welcome to the morning volatility report, or morning vol report. It's Andrew Giovinazzi, Chief. I don't know, what am I? I am the Chief Operating Officer of OptionBit.com. As welcome you to Rally Wednesday, where the market is definitely down with the fact that rates are going up. It looks like. But before all that, mastering condors and butterflies, the ideas that make these trades work and what makes them not work. We will cover that in our Saturday course on June 11th. So sign up here and get some learning on. All of you, if also give us a call or send us a note if you want to become a gold member at Option Pit. You get all the Saturday courses for free. So actually, the cost of all the Saturday courses, right? And you get gold membership. So it's a good deal. Plus you get all the other education and daily chat and trade generation idea goodies with it. But for right now, this is where we are. We're in rally mode. A couple of things to note is there is still the activity around the Brexit. There's still this, what we'll just call the volatility bulge right around the 24th. Still an undecided thing. I think part of the rally yesterday was the Greece. They settled. The IMF came up to some sort of terms with the Germans maybe saying, okay, they're going to restructure the debt down the road in 2018. And they're looking for some more economic reforms out of Greece. Same old story, but they bought them another couple of years. They're doing a good job of kicking the can. So we looked at yesterday, basically, we had kind of an idea of how volatility might play out, owning kind of the Brexit stuff, right? They're taking the vol down still, but the forward vol now is starting to come down very sharply with the best way to describe it is a lot of the short-term risks are subsiding. That is what I want to say. Let's see here. That's what I want. And so when you look at it, you're looking at how this is starting to come apart. So part of the thesis was that this forward volatility would start to come undone. And it's happening very sharply now. VIX, don't forget, is really still looking at this this Brexit area for its pricing for the S&P 500. But even now, it's a full 3 points higher to reflect that, and it doesn't look like that premium is going to change. Although this stuff is starting to fall apart. I think if you're going to sell a series, this June 17 looks like the one that is kind of marked for termination on volatility. Because if really you get nothing happening, you get more holidays, you get into the summer, right? The only thing that will change that, obviously, is some shorter-term realized vol. Okay? But for right now, we're just not seeing that. Again, I don't know how much this latent rally we have in us, but we're about 4 points from all-time highs. So the next thing we looked at really too is VIX. I haven't seen the VIX set yet. What the closing price for it was, but we're now below 14. And really where the volatility is in the futures. So 1387, 1781, that's $4 over. The June future is a full $2 over. Those premiums aren't leaving anytime soon. It would surprise me hugely if we got too far below 16, even if the VIX kept crumbling lower. The premium is going to stay there for a while. The June future, again, is another future that is marked for termination simply because it will close to the cash price, and the market for volatility between now and June expiration, remember, since we're still picking up longer terms, we're going to see a lot of seesaw back and forth. So my guess is you'll start to see lows in VIX probably maybe through Friday, and then it starts to pick back up again as the Brexit issue becomes, let's just say, more of an issue. As far as individual equities, all the financials have totally taken off. It's feeling like, without anybody saying it, that rates are in the U.S. are going to start to go higher. And my only guess is gold is right now, I think, at a 1 month low. And my only guess on all that is that might be the beginning of the end of QE being led by the Fed. That's just speculation. And probably the equity markets, it seems like they like it. We needed a reason to rally, and the end of QE might be the reason to rally, which would be counterintuitive to the last 3 years, but who am I to guess? And that's what we got. So again, I'm expecting lower vols, but not too much, at least in the short term. And stocks to rise. The commodity stocks seem like GDX and everything like that, they kind of let up. They're not really reacting as bad as gold is, but it looks like the strength in all these seems to be over. So guess what? Old-fashioned technology, right? Google, off to the races. Apple, since Warren Buffett, it's probably going to see 100 again. I would not doubt that. It may be this week. Just because we've got rally and stocks like round numbers. The last thing I would say is we're looking at oil. I was thinking of $50 oil again, just because production slowdowns, bankruptcies in the U.S. on the producers. The frackers were unbelievably efficient at shutting down production. And whatever that means, oil prices are going higher because there was a reduction in production. So I saw this like around 12.25. I think is $50 oil. We're right about there, which seems to be kind of like a penny zone for USO. But with that, for now, more of the same. We might pull back a little bit, I guess, at some point when the euphoria is gone. But for now, just stay out of the way of the upside. And with that, I will see all of you in our chat room later today.